What's going on, guys? Adam here, back at the EZFX office, bringing you another technical analysis trading tip video. Today's one's going to be based around candlesticks, what they represent, how to find them on the chart, and basically what traders are talking about when they mention the word candlestick. So a brief overview: candlesticks are just a way of representing data on the chart. They're made up of a body and a wick, and they show you the opening and closing positions of price action on the market. Candlestick patterns can be used to predict changes and reversal in trends. I'm not going to go too much into that because it's quite advanced for this particular video, but they do exist. So whenever you hear a trader mention candlesticks, all they're talking about is the way that the data is actually represented on the chart. So we've head over to the screens now. We've got an AUD JPY graph on the screen, Aussie dollar against the yen, currently on the 2-hour chart. I'm going to use this as a brief example. If we zoom in to this area here, I'm actually going to put a little box around it. There you go. Okay, so the area that we're in, this red candle here in the middle that my mouse is over. So if we take a look at this, you can see the candlestick is made up of a body, which is the colored rectangle. It's either going to be colored green or red. Green is a bullish candle, meaning price is going up. Red, bearish candle, price is going down. And if you look here at the bottom, you have the wick. So the wick is representing an area where the price was at one point, but it didn't end there. So on this particular candle, you can see it's a bearish candle, so sellers were pushing the price down. What this wick means is the sellers pushed the price down to this area, and then it got rejected by the buyers, and they pushed the price back up. Now, what you'll find is if the buyers push the price back up far enough, you'll end up with a candle like this one here, this green doji. So it ended in a bullish candle, but you can see it did have some resistance from the top where the price used to be up here, and the sellers have pushed it down, but they've not pushed it down enough to turn it into a red bearish candle. So it's still quite a bullish candle, but there's definitely some resistance on price action up there. So now, with the candles, they're made up to represent each other by the time frame. So each candle here is 2 hours of data per candle. If I change to the 4-hour chart, each candle here is 4 hours of data into one candlestick. So what you can do, if you was to go, for example, to the 1-hour chart and look at the final 2 candles at the end of the data. So we see this little, almost like a doji candle, and then a bearish candle here. If we were to put them two together and go to the 2-hour chart, it should be represented by the end candle, and it is. You see we've still got the small wick, but as you can see, it's a combination of these 2 candles at the end here. I mean, that's all they are, guys. It's just a way of representing it on the chart. If you log into TradingView and your chart looks something like this when you get on, don't panic. Just go to this button up the top here, change to candles, and you will have all of the data you need. I hope you found this informative, guys. I will do a further video on the analysis of candles later on. But this is a brief overview of what they represent and what traders mean when they mention the word candlestick.